As a mortgage professional, I've seen countless clients successfully navigate the mortgage process while others encounter pitfalls that can jeopardize their dreams of homeownership or at least delay their closing. To ensure a smooth journey towards securing your dream home, it's crucial to be aware of the do's and the don'ts that can make or break your loan approval. I'm Lisa Pinnock with Lisa Does Loans and the Mortgage Dream Team with UFFC Express. Welcome to our Homebuyer's Guide series. We're so glad you're here. This week, we're talking about some do's and don'ts that you should keep in mind to keep from sabotaging your own loan application. Let's delve into some key points to keep in mind. Do. Know your credit score before even beginning the house hunt. It's essential to check your credit score because a higher credit score can lead to better loan terms and lower interest rates. Aim for a score of 620 or higher to qualify for the most conventional loans. Don't do anything that will change your debt to income or credit score. This means don't take out any new loans, don't shop for cars or anything that will check your credit. Apply for new credit, etc. Just keep things business as usual until after the closing table. This includes being the co-signer on someone else's loan, so don't take out that loan for your kids. That will impact your DTI as co-signer just as much as if you are late or don't pay on something that is just yours. Do. Get pre-approved. Gain a competitive edge in the housing market by getting pre-approved for a mortgage. This process involves our team as your lender evaluating your financial information to determine the loan amount and the programs that you'll be eligible for. It not only helps you understand your budget, but also signals to sellers that you're a serious buyer. Don't assume that because you've been pre-qualified that you are home free. Sometimes people think that after we've run your credit for the first time, or after we've done the verifications on your job, or other items that are part of the process, that's all there is to it. Well, just so we're clear, all of those verifications are re-verified just before closing. So don't quit your job, don't max out your card, don't take out another loan until after closing. To be clear, if something happens, because sometimes things break, your truck breaks down or something happens with your job, just call us. We can execute a plan together to keep things on track because sometimes things do happen. Do. Stay current on payments and pay everything on time throughout the mortgage process. It's crucial to maintain stability in your financial situation. Avoid making any significant purchases or opening anything new lines of credit, because this can negatively impact your debt to income ratio and raise red flags for lenders. Don't close any accounts without talking to us first. As strange as that sounds, sometimes paying off a liability can actually decrease your credit score. All payments should be business as usual, paid on time, and yes, that does include items that will be paid off at closing, such as debt that we've already discussed we're going to pay, or a mortgage that is to be paid off or refinanced. If it's a bill in your name, pay it and pay on time until closing. And remember, if you're a co-signer on any obligations, those affect your credit too. Do. Provide complete documentation. Be prepared to submit thorough documentation, including pay stubs, tax returns, bank statements, and any other financial records that we request as your lender. Incomplete or inaccurate information can delay the underwriting process and can hinder loan approval. And while we're at it, be open and honest about all your details. We want to help you, but we need that information in order to do so. Many things can be hiccups, or we might need to make additional documentation, but we don't want to be doing it at the closing table. Here's an example coming up in the next don't. Don't get married or divorced while you're still in the mortgage process. We'll celebrate with you, but after the loan process is completed. Or at least mention that this is coming up, and we'll give you the best advice based on your personal situation. I've had people get married the day before closing without mentioning it. Guess what? That changes your vesting and other details. Remember, you're signing paperwork that says the same thing as it did at the beginning. So make sure that we're talking about this. And if you're getting a divorce, do it first, for goodness sake. Oklahoma is a marital property state. There's more about that coming up in another video. Another do, communicate effectively. Do you see a theme here? This one is probably the biggest message that I'm giving in this entire list. Clear and timely communication with your loan team is key. Be responsive to requests for additional information and provide any updates regarding your financial situation promptly. Transparency is vital for a successful mortgage transaction. Don't make big changes in your situation without talking to us first. Stability is crucial in the eyes of lenders. Avoid changing jobs or quitting your current job during the mortgage process, as it can raise concerns about your ability to repay the loan. Don't make any big moves that affect your income, assets, credit, or marital status without having a conversation first. Do keep your checking and saving account balances up. Try to keep as much money in your accounts as you can, and don't pull out any large amounts or deposit any large amounts that underwriters were going to need explanations for. Again, business as usual is best. Also, don't pay for anything home related like your earnest money, home inspections, etc. with cash. We will need to be able to source those funds as coming from you. So we'll need to see where the funds are withdrawn from, your checking or savings account, not your sock drawer. Don't make large deposits. Large deposits into your bank account can raise suspicions about the source of funds. Avoid making any large deposits or transferring money between accounts without talking to us first. Again, you see the theme here? Talk to us first. Do make sure there is money in your accounts for closing costs. If your loan type requires cash to close, make sure that updated bank statements that you send us reflect this money in the account. It will be a loan condition that you either have the funds to close in an account that you are using in this process, or will need to verify gift funds. If you are planning to use gift funds from someone else, you must tell us now so we can do the proper paperwork and we can make sure that this doesn't delay your closing. Don't go out and buy things for the home before we close. If you are spending cash to do this, that might be fine, but I always urge being conservative here. Make sure the cash to close is there before spending from your account. And I'll say it again, do not open that credit card or line of credit, even for the discount, at least not without talking to us first. I've seen it happen where a line of credit tanks the loan or delays the closing. So talk to us first. This also applies to buying a new car, buying a new boat. You get the idea. Do talk to your dream team anytime there is a change, consideration, decision to be made regarding your employment or income, your credit, new or paying off, anything outside business as usual, your personal status, married, single, divorced. I think you get the idea. Talk to us. We're your consultants. We're on your side, and we'll help you through the process. Just please don't set landmines in our way. And that's done by doing things without discussion that can impact your loan file. And our last don't disregard professional advice. I've said all this to say, we are here to guide you through the mortgage process and help you make informed decisions. Listen to our advice, communicate with us, and ask questions if you're unsure about anything. Ignoring professional guidance can lead to costly mistakes. Sometimes it can completely derail the loan process, and sometimes it can delay the time that you're able to close. We don't want either of those, so please make sure we keep those lines of communication open both directions. Tell us what's going on and listen when we tell you something too. By adhering to these do's and don'ts, you can increase your chances of a smooth and successful mortgage approval process. Remember, preparation and communication are key, and a proactive approach can help you achieve your homeownership goals with confidence. If you have any questions or concerns along the way, please don't hesitate to reach out to our team for assistance. Here's to a seamless journey for homeownership. Next week, we're going to talk about your mortgage interest rate. We'll go over how interest rates work, some of the vocabulary, so you'll understand what we mean when we say float or lock, fixed or adjustable, and discuss the things that are most important to know about this topic. Do you like this content? Please like and share, and we would love it if you would subscribe to our channels too. We're on Facebook, Instagram, and YouTube, and you can read more about our team and the mortgage process at www.mortgagedreamteamok.com. Thank you so much for watching, and please give us a call or shoot a text or email if I can help you, or if you have questions or ideas for topics in this series that you want to know more about. The Mortgage Dream Team is here to help you, and it all starts with a conversation.